Hi, I'm Curtis Barties.
And I'm Dayan Peffer.
And welcome back to the 04 Trading channel. And in today's video, we're basically covering chapter 2 with the SMC strategy on this channel. So if you basically didn't check out the first part, do that, because that's where we cover what we're gonna do in the series and basically everything you need to know to become a SMC trader. So this is chapter 2. Topic is market structure. And we'll just basically monologue or learn with you the chapters in this book. So if you're new to the channel, make sure to subscribe. And also make sure to leave a comment if you learn anything or if any other questions you want to cover on the channel. So yeah, so we'll basically just cover this. So this chapter 2, and yeah.
Right.
Let's get into it. So firstly, we need to understand that there are different kinds of structures. Yeah. So if you obviously haven't noticed, you get an uptrend and a downtrend. Yeah. The swing structure and the internal structure. That is the two structures. Some examples will be best illustrated by my words. Okay. So the swing structure is the first type of a structure.
The swing structure is a large range where is contained the price. That's not us, that's how it's
The book, yeah.
Once the price range is broken, it's called a break of structure. A BOS.
That's a very cool one, BOS, yeah.
After the break of structure, price will build up a certain level. Price will start slowing down and going back to the legs he just created.
Okay, awesome. At some point, price will react and create a new BOS in order to continue the trend. Yeah. This is an example of a bullish trend. So the word bullish basically means it's an uptrend and bearish is a downtrend. You probably heard these terms before. So this is just a illustration of a bullish structure. So you can see there this is a higher low, obviously. This you have your higher high, higher low, higher high, higher low, high high, high low. So this point here where the previous higher high is overtaken by a new higher, which is, and this here basically is a BOS, break of structure. So yeah. So this is an example of a bearish structure. So
this is a downtrend.
So this is basically just a downtrend, as we can see there. Basically, it does the same. It makes
lower highs, yeah, lower lows, lower highs, lower lows,
yeah, and so on. So the internal structure.
This kind of structure only a schematic way to see it. On a real market, price will create a lot of internal structure in the swing structure. So I'm guessing if it creates internal structures, that will probably be on your 15 minute,
yeah.
On your 15
depending on the
frame.
chart, yeah.
Yeah.
So on the real market, price will create a lot of internal structures in the swing structure. This is where most people get lost, as there are many highs and lows. They don't know which one to choose. Let's clarify all this by introducing you to the internal structure. So firstly, there is a swing structure, which is your overall structure, and then we got an internal structure. Yeah. So this is just an example of it. Let's just zoom in a little bit. Yeah. So as you can see, this just a normal white line is your swing structure, and the red line, dotted red line, is your internal structure.
Which I'm guessing is your 15 minute.
15 minute.
Yeah. 4 hours.
4 hours, yeah.
And so on.
So as we can see there, this is your swing. This is your BOS or swing high. This is just another word for your high, swing high. So here we got your BOS, and there we go.
Okay. As you can see, the internal structure is marked with a red line. That shows that there are a lot of highs and lows before the swing shows up. Let's say, for example, that our swing structure, see, is in the hour 4 time frame.
Yeah.
Yes.
Chart example. As we can see here, the chart example. So this is just a line, and this is how it actually look on trading view or so on. So you can see here, it's just an illustration of this. Zoom it in a little bit. There we go. So okay, that's a photo. There we got our swing high, our swing low, swing high, swing low. The fractality of the market.
There we go.
Definition of fractals: a complicated pattern in mathematics built from simple repeated shapes that are reduced in size every time they are repeated. Examples are everywhere in the forest. Okay, they're using the forest as an example.
Yeah.
Trees are natural fractals, patterns that repeat smaller and smaller copies of themselves to create the biodiversity of the forest. Okay, so that's basically just a example you use to identify basically the chart.
Forest is just one big ass chart.
Yeah. Now we can apply this to the market. Let's see a 4 hour and a 15 minute time frame, a 4 hour time frame chart. So this basically is a 4 hour time frame chart. As you can see here, we got a BOS, we got a swing low. Here we create a swing high again, a high, swing low, and then so. So this basically is your BOS, and then it goes on continuing the market trend.
Pause if you need more time to go.
Yeah, definitely pause if we're going too fast, and obviously read it yourself if we're talking too fast. We're basically just learning ourselves on our side. So yeah. So on this on the 4 hour time frame, we can clearly see that price is a bullish trend, making higher highs and higher lows. So obviously higher highs, high lows, higher highs. Between those higher highs and high lows, there are a lot of internal structure. We can see on the 4 hour, but let's zoom into the 50-minute to understand the fractality of the market. So basically this is the 4 hour, and we're going to take a deeper look into the 50-minute to see this exact same, for example, trend in a 50-minute.
So your 15-minute will probably be like your internal structure.
Internal structure, yeah. 50 minutes is your internal structure of the 4 hour. So as we can see here, the 50-minute chart. So this is the 4 hour, just to illustrate again, and this is the 50-minute for this specific trend now.
Okay.
So as we can see there.
On the 15-minute chart, we can clearly see that the internal structure in hour 4 is more visible. Also, we can collaborate that hour 4 internal structure can be the 15-minute structure.
Swing structure.
This helped a lot to understand how we can follow the market even if we have multiple time frames to use. A lot of people must understand the structure because of not knowing the fractality. This is an important concept in order to understand well the structure.
The words that gives you a little bit off. Yeah.
English is awful.
Okay, so if you understand, just pause the video and just read that for yourself. So here we go. Let's take a deeper look into a bearish 4 hour internal structure in the 50-minute time frame. Okay. So this is a bearish example of the internal structure and the swing structure basically.
What does it say there?
The 4 hour internal structure and the 50-minute swing structure basically. So there we go. We can see this is your, I would say the normal line is just basically showing the line instead of like a trend. Like a dotted line. So this is just the line, and then this is your actual chart. Let's just zoom in a little bit as you can see. So this here is your actual chart, how it will look on TradingView. So there we go. As we can see, the 15-minute time frame went from a bullish to a bearish, and the market follows a bearish 15-minute trend until it creates the 4 hour next swing low. Okay, so that's basically, you have to read this and look at the chart as you read it. In the next chapters, we will be able to see where lows or highs, depending on the structure, can be created. Okay. Now we go through the bullish, bearish trend, the fractality of the market. We will see how we identify the change in the market structure for the purpose of seeing the switch and be able to taking part of it. So they obviously, when you go in a trend, there will be a change of character or a switch in the market where the trend goes up and then basically goes down. But we'll look at this now. So the change of the trend, yeah.
Change of trends. First of all, there are rules to respect with the structure. On a bullish market, price make higher highs and higher lows. For a low to be confirmed, it needs to break a higher high. So there needs to basically be a higher high, and then the next higher high has to break through and be higher.
Yeah, 100%. I get you, bro. I get you. So as we can see, as we saw in the previous market structure, basically your your higher low, higher high, higher low, higher high, higher low, and so on. So you can see this higher high didn't take out this previous higher high. So that means this low is a very weak low. This low is confirmed because this higher high was taken out by this higher high here. So this low is very confirmed if you get that. Okay. So this is a weak low because this higher high, or it's not a higher high at this point, but this here didn't take out this point. So this low here is very weak.
It didn't break structure.
It didn't break structure. So let's go on. Vice versa in a bearish market. Price builds lower low and lower highs. For a high to be confirmed, it needs to break a lower low. Otherwise, the high will become weak. So I think this will be an example. Here we go. So you can see lower high, lower low, lower high, lower low, lower high, lower low, and this lower low, or lower low, weak, because this lower high didn't take out this previous lower high. Basically, it was not a lower high, but basically didn't take out this point of structure. There's no break of structure.
There's no break of structure.
Yes. No BOS, as you can see there. Just to zoom it in a little bit. There we go.
No BS.
Yeah. So the change of character, or the CHOCH, how would you pronounce this?
CHOCH?
CHOCH.
The cha. Change of character.
Change of character, yeah.
The change of character. The CHOCH is the first break in the counter trend of a market. In a bullish market, the CHOCH will be the first low that will be broken, and vice versa in a bearish market.
Okay, so here's just an example of a change of character, as you can see. So we'll obviously know this point now. You have your lower low, your lower high, your lower low, your lower high, your lower low. So we get to this point. So a change of character is when this, for example, happens here, this point of here. So this trend basically creates a lower low, but it doesn't come. So a change of character is when it takes out the lower high, for example, at this point here. So you can see. So you can obviously just pause the video and look at this yourself. We clearly understand this. Yeah. So a bearish example of exact same. This was a bearish example. So this is your bullish example, your bearish example. So here we go, the exact same, just in reverse order. As you can see, there's your low confirm because this took out this one took out this here. So the previous example, and change of character happens here when this takes out this previous lower low, basically higher low. The change of character doesn't confirm that the trend has totally changed or changed totally. This is only the first sign, and big players as banks and financial institutions, BFI abbreviation, can use this to trap people. It has been operated at the right place, and we'll see later in the book how it's used at its best. So we will see basically. So this doesn't really confirm a full change of character. Yeah.
Yes, basically banks will liquidize you.
Yes.
And you'll be like, oh no, I should have.
Now we'll see how a trend totally changes. I have a particular view of the structure that allows me to follow the right price, and I don't get into traps. As I said earlier, the CHOCH doesn't confirm the total change in the market structure. In fact, to assume it, price needs to break a second structure on the left. Okay, so this basically we're going to show a chart example, as we can see. So this is basically confirming a full change of structure, basically a full CHOCH. Yeah. CHOCH. So yeah, we can see here was
change of character.
Change of character, yeah. So here you can see this is your first change of character. And for full trend or market change of a trend, it needs to break basically the second swing or higher low, on the left side. As we can see here, is a change of character, which is this one. Test again, and then this point here basically broke this. So then that's a full change of structure basically. Then we create high highs and basically becomes a bearish trade.
Lower highs.
Lower highs. Yeah.
Yes, there we go.
Once we got the second structure broken on the left, we can assume that the structure has changed completely. There is a common error with structures I see every day. This error is to count the change of character, and immediately after to employ the actual price to assume that we change in structure. So once again, pause the video if you want to look at this more briefly. So you can see there. So here we see again another example. Here we got change of character, BOS. You can just look at that yourself. So what is wrong with that? Okay, just zoom out a little bit.
Okay. What is wrong with that? In fact, if we follow the structure rule, the low on the left is still protected. Which is that?
This one, yeah.
Price could use the internal structure to induce people to make the wrong move and create order at the same time. Instead of going down, price will mostly do this.
Yeah.
It will liquidize the shit out of all of you.
Yep. 100%. As you can see there, change of characters, you look at this previous example on top. So this is basically when price doesn't do this part. So it basically come test this one here, which is the break of structure here. You can see there. They basically is protected low. So just zoom this a little bit inner.
I should have worn my glasses today.
Yep. As we can see, a lot of sellers would be trapped because people would think this is a change of character, broke of structure. So a lot of people would assume it's basically changed the structure and basically becoming a bearish structure now. But this is where sellers would be trapped and would get out the market as soon as the price reacts from the protected low. This allows strong move with a lot of momentum. So yeah, so this is the momentum you're basically talking about here. This will introduce the complex pullback, which is a form of pullback that takes a lot of time to follow the structure. It creates a confusion in the trader's brain during the analysis. It's important to see and to be able to use it as well without being lost. Okay, the complex pullback. So here's just a little bit more information based on it.
And whatnot.
Schematic, yeah. It's schematic of the complex pullback. So this is basically how it looks like. Here we got a BOS, basically makes a new high low, or protected low at this point. So basically just...
I assume the red dots are
the red dots is your swing structure.
I feel like the blue dots are the internal structure.
Internal structure, 100%, yeah. So the red dots here is basically just your swing structure, which is your 4 hour. And then the fifth, this blue dots here is basically just your internal structure, which could be the 15 minute. Yeah. So that's basically a particular low. So this is a complex pullback where you're unsure of basically what happens. Then it basically comes test a protected low, and then basically a lot of sellers would be changed because they're seeing it's a downtrend, and then basically get liquidated and price continues with a strong move to the upside. So the red dots is the swing structure as we just mentioned. As we can see, the swing structure takes time to be created. Yes.
So 4 hours.
So this 4 hour. No, your 15 minutes. 15 minutes. So it takes time to be created.
The blue is your 15-minute because the blue would be your internal structure.
Okay.
It will be like the structure that you would be looking to make your trading basically.
Okay. Yeah.
I'm sure.
Yeah. So swing structure we can see there. The blue dots are for complex pullbacks. As illustrated, price creates plenty of internal structures to run to its protected low, as said earlier. This can create a lot of confusion if you don't understand it well. You need to strictly apply the structure rule. So once again, pause the video and read this for yourself and make sure you understand this and have a visual representation of it for yourself. So yeah. So here's just another view of it. This is basically just lines, and this is how it actually would look on a chart. As we can see here, we got a BOS, creates basically your BSA on top, and this is your protected low at the bottom. Here creates a complex pullback, basically having a lot of internal structures, creating higher highs, higher lows, basically come back to test its protected low. There's just a lot of more words. So basically here on the chart example, we can see that the price is bullish. We can see here, it's a bullish trend. At a certain point, market lost its power and it create a bigger pullback. So here, for example, yes, the market lost its power and creating a pullback now. To be able to continue the structure, as we can see, the price takes enough time to come back to its last protected low. After reaching that low, price suddenly moves faster than when it was a pullback. This shows that sellers get trapped and the bullish trend that continues. So this is basically what that whole illustration means. This part here is the core part of this complex pullback. And that's basically market structures.
That is market structure.
And that is, once again, obviously, go back to the start and watch this. We probably would have spoke fast. I think we believe we spoke fast. But once again, we all obviously read this book like a few times already. So if you for the first time, go back and obviously make your own notes, write down stuff we probably explain, and obviously you can pause the video to see the author's words for yourself. So you can do that for yourself and look back, make notes, try to draw stuff out and understand it for yourself, obviously. Yeah. So I think that is chapter 2 of the SMC, which is market structure. And we covered SMC. If you didn't watch that video, make sure to cover that and look at that. And basically the next chapter we'll be looking at is liquidation. And liquidation, like you mentioned, Diane, obviously said that's where you get liquidated. Yep. So this is a very big chapter, probably going to be a very long chapter in the next video. So it's a big topic in SMC. So yeah. So this is probably going to be one of the biggest chapters, part of SMC, which will be in the next video. I think this is going to be like 2 or 3, depending on how long it goes. Probably going to be 2 videos or 3 videos in the upcoming, which is next week. So yeah. If you haven't checked out Diane's videos coming out Sunday, so basically all these topics we discuss here, you're basically going to cover this on the channel. So yeah.
I wouldn't cover it, but
we'll be using it, be using it. So
my video that will be coming out after this video will be me starting my trading journey.
Yeah.
You can follow along. It's going to be a 6-part series. Yeah, hope to see you there.
Yeah.
Please like and subscribe.
So this was us, Curtis.
And I'm Dayan.
And until next week, we'll spot you in the other videos. Peace out.